I recently helped this family buy a beautiful house in a very desirable city right now. So how much did it cost for them to buy this house? Is it any different than any usual time? Because let's face it, right now things are just crazy in this housing market. So there's a lot of questions that you might have as a first-time home buyer. In this 3-part video series, I'm going to break down exactly every single cost that first-time home buyers are spending in this market. And I'm going to walk you through this family's journey from beginning to end. And at the very end, we're going to find out what was the final number they paid. If you want to play along, the final purchase price of their house was $260,000. Now, please feel free to comment below what you think they're going to spend out of pocket. And if you're right, you get a wink from me. Anyways, in this video, we're going to talk about the loan. How much loan and how was the pre-qualifying process and how much did they have to spend out of pocket for the essentially the down payment. So let's get to it. Funny story is I actually met them I think it was November or even October of the previous year. And we had, gone over the steps of what it was to take to buy. And it looks like they needed to work on some things on their credit. And they kind of just saw the housing market go crazy over the span of 2020. And as a matter of fact, I would call them and they wouldn't reach out. So I just thought I'd lost them. And funny enough, they called me a few months ago saying, hey, we're ready to buy now. And I said, whew. You picked a hell of a time. So because they were able to take excellent care of their credit, they were in the 700, and they had a good down payment, they essentially boiled down their options to 3 options. They were not veterans, so they couldn't go VA loan. So they either had the option to go FHA, which is 3.5% down. They could go conventional, which could be 3 or 5% down. And of course, there was the down payment assistance, our good old friend DPA, that they could do. Now, these folks were looking in a pretty desirable area, so they knew they had to spend about $300,000 to $320,000. So we were using the 300 number originally to get a good idea. So with FHA being 3.5% down, they knew they were going to need about $10,500. With conventional, they were trying to utilize the 3% down option, so they only needed $9,000. However, if they wanted just a little better rate, they could go 5% and do $15,000. And of course, the DPA option would have given them ability to save a little more of that money, but of course would have locked them in with the higher interest rate. Now, common belief with people is FHA is for first-time home buyers. Therefore, if you're a first-time home buyer, you have to go FHA. Well, in this case, because these people had the ability to get their credit up higher, because remember, I met them almost a year ago and gave them a good plan of what to start doing with their credit, they were in that position to have that higher credit score. Since they did that, they had the ability to actually shop around and see, okay, what interest rate will conventional give me and what interest rate will FHA give me? And now these people were buying a long-term house. They're not looking to be like little investors where they buy and sell a house every 3 to 5 years like most people try to do. So they knew that the long-term cost of the house was more important than the short-term gain. Now, after doing all the numbers, they figured out that going conventional with 5% down gave them the best monthly payment, with FHA in the second and the conventional 3% with a close third. I don't think they even considered DPA because they knew they wanted a low interest rate, it being a crazy market, and of course it being a longer term house. When discussing the strategy of when we go looking at houses, which we'll talk about in the video number 2, where we're going to discuss how that went, I told them, guys, right now it's an insane market. I'm expecting you fully to pay your closing costs. And I told them, some people might think that's negative. Some people might think, hey, well, he's not a strong negotiator. I'm just telling you right now, I've been hitting this market forever. You're going to have a better chance paying your own closing costs. So let's pay your own closing costs. After doing the math and looking at the long-term effects, what we decided to do instead is, hey, let's not go 5% down conventional. Let's go 3% down conventional. Although FHA would have maybe given them a better monthly payment just slightly, conventional was ultimately better for them because that interest rate wasn't for sure solid. It could have gone lower during escrow, and spoiler alert, it did. So it ended up being a better monthly payment than FHA. And the second biggest reason is conventional has the ability to eventually get rid of your PMI, which is a huge thing for somebody who's planning on living in their house for a very long time. And by the way, for those that don't know, mortgage insurance is essentially the insurance policy that the lender puts on the loan to protect themselves from you. If you ever default on your loan, that mortgage insurance kicks in and they get a portion of their money back. So that way they're protected from it. And with FHA, unless you, I think, put 11% down or something crazy like that, you're going to have that PMI forever. You're never going to get rid of it unless you sell and refinance it. So basically, you're paying for protection against yourself, and it's usually higher when you're higher risk, but if you're going FHA, you're considered higher risk. I don't know if that makes sense. With conventional, it's based off your credit history. It's based off your situation. So if you have decent credit, then your PMI should be in theory lower because you're less risk. However, you could eventually just get rid of it by putting 20% down initially, or as time passes on, once your loan to value reaches 80 to 20%, meaning your loan is now 80% of the value of the house, you get rid of it. So for those looking to be in a long-term house, it makes 100% more sense to go conventional. And even though the numbers were slightly higher for 3% down, it still made a lot more sense to do it. So all in all, they knew they needed to come up with this amount, and they knew that we were expecting closing costs to be paid by them. So I guesstimated the amount to be about this. And I told them, as long as that money's in the bank now, you have a separate savings account just for, emergencies, you should be solid. All we had to do now is find a house in a market where houses sell within hours in the most desirable city in Arizona. How were we able to do that? We're just going to have to wait for the next video to watch that.